You're welcome to the Business Lens on Rapid TV Abuja. And in the world of business, let's look at some of the hot business trends, starting from Nigeria's capital market regulators intensify risk governance as the Chartered Risk Management Institute of Nigeria partners with Securities and Exchange Commission to train market operators on strengthening enterprise risk management. Also, Nigeria's daily petrol consumption dipped to an average of 52.9 million litres per day in November 2025, which went down from 56.74 million litres per day in October, according to the latest NMDPRA fact sheet. Next is West Africa's airfares are set for a major drop as ECOWAS moves to abolish all air ticket taxes across member states starting from January 1, 2026. Next is Nigeria's oil sector recorded a major boost as NNPC Exploration and Production Limited hit 355,000 barrels per day on December 1, 2025, which is its highest daily crude output since 1989. And in the markets, the market capitalization fell to about 93.625 trillion naira, which went down from the previous session, which reflects a decline of roughly 33.8 billion naira as investors locked in gains. We will look at the stories and more. Back, this is still the Business Lens on Rapid Television, Abuja. My name is Divine Alex. And joining me today are economist Abiola Adekunle.
It's good to be here.
Thank you for being here. And global financial analyst Daniel Efa.
Good morning.
Thank you for being here. Okay, let's start with the week's hottest stories, where Nigeria's capital regulators are intensifying risk governance as the Chartered Risk Management Institute of Nigeria, CRMI, in partnership with the Securities and Exchange Commission, SEC, trained market operators on strengthening enterprise risk management, ERM. The session, which is anchored under the theme, Strengthening Risk Governance and Compliance in the Nigerian Capital Markets, comes at a critical time as the newly enacted Investment and Securities Act, ISA 2025, ushers in tougher compliance expectations, deeper governance requirements, and enhanced oversight across all regulated entities. CRMI noted its expanded institutional and individual membership, reinforcing its alignment with global standards under IFRIMA and FARMA. FARMA. SEC's Executive Commissioner Operations Bola Ajimole stressed that Nigeria's capital market is evolving with rapid technology disruption, interconnected trading systems, and heightened economic uncertainty, making ERM not optional but an operational necessity. He warned operators against submitting copied, poorly prepared, or misleading ERM frameworks, announcing that sanctions may begin in 2026 for non-compliant entities. The session also covered supervisory expectations around capital adequacy, stress testing, risk culture adoption, and proactive compliance aligned with Nigeria's new regulatory landscape. Now, this brings me to you, Mr. Abiola. I'm going to start with you today.
Okay.
With the Investment and Securities Act 2025 now in force, what specific ERM gaps do you foresee among market operators?
First of all, I would like to say that within the last 5 years, the SEC specifically has been able to come up in terms of meeting with what is obtainable in the market. Before now, we used to have this divorce of some of our institutions in the financial market, especially when it has to do with banks and the money market, where we don't have, where you see that this is what is going on in the real market and this is what the regulators are doing. But of recent, SEC has been able to bridge that gap. I know because also in my sector, they've called for meetings with us severally, at least twice, to tell us, to advise, train, and also tell us their plans, coming forward. Regarding ERM, I'll come back to that, but for now, I just want to say that SEC is doing a whole lot right now, and I would like to commend what they are doing.
So which areas, do you think require fastest compliance?
Maybe Daniel would help me out there.
Daniel, let's
So I think one of the key things when it comes to what SEC is trying to do, particularly when it comes to the market players, I think the major conversation about ERM, or the major conversation around ERM, it's for fund managers, right? Because the stockbrokers, asset managers, who are all under the SEC purview, are basically what's the word? Are basically playing in a space whereby if we have the right tools, if we have the right setup, we can easily integrate our capital market with the global capital market. And so what SEC is trying to do is to get us there. Of course, we are not there yet, but we are actually closer than where we were, because when you look at Africa, for example, I think maybe only South Africa and Egypt have the level of sophistication that we now have in our market, right? So with the old ISA that was just released, that released new guidelines, updated guidelines on how even fund managers should operate, ERM now comes as a point whereby it makes more sense, right, to have a system, either it is technological or it is a blueprint framework of how you're going to manage your risk for your organization. It makes a lot of sense, because what we want to avoid is fund managers who can go behind the existing rules and just behave anyhow that is out of the accordance of whatever the act is saying. So with ERM, with a blueprint that you can submit to SEC, it makes more sense, right? Of course, we know over time the ERM structure will become more technological, that SEC can just be integrated into like an API into whatever their framework is. But for now, it might be documented, and that's why SEC is also saying you cannot copy someone's because then you have different funds, you have different clients assets, you have different clients
you trade different
risk.
things.
Exactly. Yes. So those are the things that it makes sense. What I just want is that at the end of the day is that this thing is followed to the letter, because a lot of times what we have is we have some certain big fund managers that would not want to follow certain kind of rules, but there's a framework. It makes sense so that even as a client, I can go into these stockbrokers or fund managers and simply ask, what is your risk management approach to the way my funds are being managed? So, and it also helps SEC to also monitor whatever activities the players are doing, basically.
Okay,
just to add a little, sorry to cut to what he said, is that for a long time in Nigeria, we've been used to doing things, I don't want to use the word anyhow, but for want of a better word like that, you know, we always feel that the end justifies the means, you know, but when it comes to this kind of market, the end doesn't necessarily justify the means, because at the end of the day, if the end is not what we are actually expecting, we need to go and look at the process. Did you actually follow the process? And if you follow the process and the guidelines that the SEC have laid down, then we can say, oh, this guy actually followed it to the letter. Whether the end is what you were expecting or not, they followed procedure. But because we're coming from a place where people just feel that as far as you can show results, however you got to that result does not matter. So compliance, like you said, on the bigger level with some guys that have big funds might be a little bit, you know, problematic in the beginning, but eventually everybody would,
especially
will come in line.
There is now penalty attached to it.
Yes, so if you don't follow, then you pay penalty. But penalties are also very, very tricky. And I would explain. Now, if somebody, for example, globally says, okay, you commit a crime that has to do with, let's say, $10 million, and the crime is maybe fraud or something, and you see that the penalty is that you go to jail for 2 years. Some people actually go into that crime knowing that they can bear the penalty. So penalties are tricky, but it's also a good start.
Because penalty in this space is someone somewhere who have suffered financial injury, and that is a big problem. Yes. And for kind of space that we are in, where the structure of SEC is putting in place, as sort of we get help in the funds that we've seen, right? Over 25 trillion added to the market this year alone. So if you are projecting it based on projection, you're looking at maybe 30-40 trillion for next year, right? So if you're going to be adding that to the market, that means that there must be proper regulation, there must be standard, it must be something that you can go to the UK, compare notes, and it's the same. So that way we can be we can have our stocks, we can have our instrument listed globally on every platform, and that is the whole idea.
That's what we're looking for.
Okay,
exactly.
So given technological disruption and cross-market interconnectedness, right, what new or emerging risks should capital market operators prioritize over the next 12 to 18 months?
Risk of foreign funds. Some of the risks I mentioned might not be like standard, you know, but risk of foreign funds, because I have always been someone that clamors for indigenous funding. I'm not saying that foreign funds are bad; they are good, you know, but they usually are like short-term funds, you know. So they need to bear this in mind that okay, 25 trillion, 10 trillion, whatever trillion is coming from the, you know, from the foreign space, these funds might also be leaving abruptly. So they should account for such a risk. Okay, that's one. Then two, also they need to look at one way or the other security, because if you look at the extensiveness of insecurity, you see that some funds that you might buy into, some stocks, some shares, some whatever you might buy into, that particular company might have a problem with their operations if wherever they operate has insecurity issues. What I'm saying is that insecurity can really come out at any point in time, anywhere, and that could affect a particular company, which could affect a particular fund, and at the end of the day, if the risk is not being you've not been proactive, like this thing might happen, it might not happen, then they might be caught, you know,
how
all of a
prepared do you
sudden.
think Nigeria's capital market is?
So I think that I think that we are not there yet, but I think we are way better than we were. I think that we are more sophisticated than before. I remember in 2020 where I said, okay, let me try to start trading stocks, and I entered and nobody was buying. I was said, like, you have to wait, like the auction practically. So it was so I think what would eventually happen, and I think next year will probably be that beginning. Capital market operators will have to start deliberately working towards retail engagement, right? We have the risk is too concentrated towards institutional investors, that retail guys are not carried along, and Nigeria is that space that we might think that Nigerians don't have disposable income, which is true, but we can have a lot more people. We have a lot of probably the highest young population in the world in terms of numbers. So it's about education, right? It's about capital market operators now taking their time, right? Now you've seen that there's possibility of the market being larger than it is. So why not just engage as much people as possible? Because now I remember in 2009, 2009, that era where a lot of Nigerians really invested in stocks. A lot of Nigerians invested in stocks. So that generation lost their stocks maybe 3, 4, 5 years later, right? So now this is another generation that is young, that you can actually still push the right knowledge. But the difference is that now there's technology to help it better. There's more advancement, there's more regulations, there's more integration with global standards. So you can actually have a market that can survive and even be part of probably top 30, top 40, top 15 in the world, basically.
I think majority of our maybe stock brokers, they might not really have an education department in the real sense of the word. And we need to have more of it. We need to have seminars where we have thousands of youth sitting down.
Because what we have now are just influencers.
Yes, and now that we even have it, but let them even use the influencers. Okay, let XYZ stock firm use so and so and do a Twitter space.
Exactly.
It mustn't be physical. And do a Zoom meeting, a Google Meet meeting, and at the end of the day, keep educating and let them see that there are incentives there. Because when you the best time to invest, like they say, is 20 years ago. The second best time is now. So if somebody is 18 years, 19 years, 20 years, and he sees that I can put 20,000, 50,000, 100,000 in the stock market and just play the long game, you see that in the next 20, 18, 15 years, you would have that money would have turned to something else. So these are some of the education we should be encouraging the younger folks, because somebody that is above 40, above 50, you know, even though all of us want to live forever, but we know we are not going to live forever. So the years are still there potentially for somebody that is younger.
Okay. And still in the energy and regulatory space, which is away from the capital markets but connected to national supply stability, new data from the NMDPRA shows a sharp shift in Nigeria's fuel consumption pattern. This is going to usher us into the next story, where Nigeria's daily petrol consumption dipped to an average of 52.9 million litres per day in November 2025, which went down from the initial 56.74 million litres per day in October. According to the latest NMDPRA facts sheet, local production rose to 19.5 million litres per day, driven by the Dangote refinery's increased output of 23.52 million litres per day, while imports surged to 52.1 million litres per day as NNPC moved to rebuild national stock and offload 12 delayed vessels. Diesel consumption averaged 15.4 million litres per day, aviation fuel 2.5 million litres per day, and LPG at 3,992 MT per day. Dangote Refinery says it is ready to supply 50 million litres per day from December, rising to 57 million litres per day by February 2026. But let me start with you, Daniel, now. With petrol consumption dropping down to 52.9 million litres per day in November, while imports surged to 52.1 million litres per day, what does this reveal about the true stability of Nigeria's domestic supply chain ahead of December peak period? Because the peak period is fast approaching.
Well, depends on it depends, right? Why? Because if I feel the numbers is marginal. I feel 52, 56. I think it is not significant enough to be a cause of concern, right? However, I think what I'm looking at from the conversation is that our local for November, our local supply was less than 40%, right?
Okay.
And that is a big issue, right? Even though Dangote is now saying that it's going to do about 50 million litres, but how much of this would be locally produced? No, locally demanded for, because that is the problem we've always had. And then because at the moment I think it's about 8% or 9% of whatever is producing, that is what we take, right, locally. Because then are we going to flood the market then? Because NNPC is also saying that they're also trying to increase national stock. That means that they're trying to have a certain level of reserve, which will definitely control the supply mechanisms and all. But the question is, will a supply of 50 million litres from Dangote not halt market dynamics? What will exactly happen when he said it's ready to start uploading that into the market? Our total demand is just 52 million, or let's say total supply. We can't say that's a demand, but if 50 million comes from only him, would it not raise another set of problems? So I think it's something that we would see for December. I don't think it will exceed the 50 million, because personally I don't think we'll consume up to 50 million. I just think what we supply is not necessarily what is demanded. Yeah, so we can definitely have people with storage.
Christmas, Yuletide period, people who consume this a lot.
I would feel that, I personally would feel that I don't, based on what has happened in the last couple of weeks, months, I don't think Nigerians will travel way more than they've been doing in previous years. I think that the insecurity issues has really toned down, I've created a lot of fundamentals around that will reduce traveling. Yes. I think even last time I was at the major road transport parks, most of them are not unnecessarily increasing prices because the demand is extremely low. What we've seen demand for is that a lot of these road transport now use a number of logistic businesses than human carrying human beings. So that might also happen. That might happen more this period, but not necessarily human traffic that we usually would have. But we'll see about it to be drastically.
I even feel that the demand naturally around this Yuletide season, I even feel that the demand is not really from transportation. Because if you look at the dynamics, let's say Abuja, for example, let's assume there's no insecurity issues. Now you see 4 families that have, let's say, 7 cars. They'll park those cars and go and take a public transport down to wherever they are going to. And when they are there, they'll stay more in the family house than going up and down. So what if demand increases during the end of the year? It might be more of maybe generators, or that type of stuff, because everybody's at home, than people driving up and down. Because even if you go out, you rarely see people within the cities. People have seen it as a time to rest and just celebrate with their families. So then concerning the Dangote providing or going up to 57 or 50 million, personally I am not in support of all our PMS coming, even up to 60% coming from one source, because the security issue also. The same way I've always been against this power grid thing, where you have almost more than 60% of the power in the country coming, or 80% coming from one place. It's a security issue. There needs to be diversification.
Okay, now let's look at the structural, logistical, regulatory bottlenecks. And Dangote Refinery supplied 23.52 million litres per day, but still operates below its 35 million litre capacity. What do you think should happen here, especially to prevent, full-scale operations?
To prevent full-scale operations?
From Dangote.
Okay, so so as it stands, I think that as it stands, like I said earlier, as it stands, that's an uncertainty we're yet to face, because then will Dangote want to flood the market? Because then it doesn't even have a control of the market or marketing space yet. He doesn't have that loyal. In fact, his level of loyalty in that market is less than 30% or 40%, right? Which I accept 100% because then it is a refinery and it's meant to actually source not just locally. There's a lot of demand across even the South African sub-region that you can actually sell to, right? But we've understood the fact that what it has always cost is some certain kind of rift. If we want to increase supply, it will just cause a controversy, then everybody starts to get. So my fear is that this 50 million liters doesn't become another issue, right, for us in January. In a new year, that we start looking for, you must buy, you must get. So
and they let the price come down. if the price, if this,
there's an incentive, I think, and that's what I'm saying.
If there's an overflow of supply, then let the price come down. Apart from that, I don't think anywhere in the world it is a good practice having a concentration risk.
Yes.
Let's also look at the fact that NNPC had to act as a supplier, right? As a last resort.
NNPCL is a supplier. NNPCL is a player, just like NNPC player. Just like exactly. NNPCL is actually
and they are also a reserve.
So it is because it's a government owned business. It is also charged with the responsibility of ensuring energy security.
Yes.
So not just buy. So when you buy, you also keep, so that
they are there to fill in the gap.
Exactly.
There's a gap. Is that gap I'm scared of, because let's assume now that Dangote is supplying 90% of our local demands, and for any reason Dangote could not meet up to that for a couple of days. What happens? You now start seeing queues, everybody trying to carry us. But like you said, NNPC is there to fill the gap. But how much gap can they fill? How much reserve do we actually have in Nigerian reserves?
We don't have. We only have private depots, so we don't.
And while Nigeria works to stabilize domestic fuel supply and ease pressure on consumers, the wider West African region is also moving to cut costs for travelers, this time through sweeping aviation reforms. I think a lot of people are going to be happy about this. Okay, this is taking us to the next story, where West Africa's airfares are set for a major drop as ECOWAS moves to abolish all air ticket taxes across member states starting January 1, 2026. Current studies show that 64% to 70% of ticket prices in the sub-region are taxes and aviation-related charges, making West Africa the most expensive region for air travel in Africa. A Lagos to Dakar ticket can cost traders over $3,000, driven largely by government-imposed levies. ECOWAS says these charges violate the ICAO guidelines and suppresses passenger demand across the region. The policy, approved by the head of state in December 2024, aims to boost regional integration, cut travel costs, and strengthen trade, tourism, education, and healthcare mobility. Now, this is taking me to, let me start with you, Mr. Abiola. With taxes, right, mixing up as high as 70% of, ticket prices, how drastically do you expect fares to drop once this policy takes effect?
It should drop drastically. Also, this has been an ongoing concern that should have been done for the longest time. The reason I'm saying this is because if you look at a mirrored effect in Europe, for example, the Schengen states, if you go to Europe, you can get tickets of 30 euros, 40 euros, but you see that just within Nigeria alone, you are already seeing flights going up to 500,000 naira, which is like $300. So if this is really implemented, because even locally, the charges we're paying, you see that the ticket itself, the airfare that goes to the company itself is not much, but the taxes and all manner of whatever charges are what makes up majority or more than half of the fare. So this is a good one, first of all. Two, it's going to increase tourism across board, because a lot of people actually would prefer to travel out of Nigeria for Christmas than to say they are going to the village. That's the truth. But when they think about it, they throw away the thoughts immediately, because you just want to go to Ghana. I was checking yesterday. We're trying to bring in a colleague of ours from Accra, and we're looking at the return tickets, and we're seeing $1,100 and something dollars. I'm talking about almost 2 million naira. Accra, if you don't know, is 45 minutes flight from Lagos. So you're traveling from Lagos to Ghana for 5 minutes, and you're paying almost 2 million naira return ticket. But if you're going from, let's say, from Poland to Germany, you might not spend more than 100 euros. So you find out that these charges has been one of the major issues. Why you look at what's it called, the radar over the world. You see flights everywhere. Then Africa just looks like an uninhabited, continent.
Okay, so Daniel, do you think that airlines are definitely they're going to pass the savings to consumers? Like, realistically,
in the first place, it's a terrible thing for us to have ECOWAS, Economic Community of West African States, that is meant to be a regional integration body that has that kind of high cost for travel.
What are they using the money for?
So what is the essence
what
of
are they even using the money for that they get from all these taxes?
So because it doesn't make sense, and I'm happy that the one saying it's against ICO. So that means we'll be doing something that they do. Exactly.
They should take themselves to court.
So I don't know. I'm happy they are doing it, and it's long overdue, and I think it will probably wake up other issues that are affecting trade between ECOWAS countries.
Okay, let's go on this quick break. But before we go on this quick break, there is a program that is, I just think I should just allow Daniel to just do the justice because he is in a better position to explain what this program is about, the market outlook for 2026 by CM Trade. Daniel, over to you.
Okay, so on Sunday, we'll be having an event talking about the markets, and the event would be about looking what should we be expecting in the market in 2026. So whether it is your stocks, whether it is bonds, whether it is commercial papers, just what is the market saying. Of course, we did something like that last year, and most of all the predictions from the analysts really came true for 2026. So for 2025, we're doing the same thing on Sunday. I think the details will be on the screen, and if you are interested, be a part of it. The QR code to scan and be a part of it is on the screen. Basically, just let's just talk the markets. Let's talk opportunities. We have an analyst, Mr. Biola is seated properly here. Then so many other analysts that have been on the show. Even we'll be talking and we'll be looking at different assets, different class of assets, gold, crude oil, and just it's going to be an interesting time.
Okay, you heard Daniel. It's going to be an interesting one. So make sure that you keep the dates. Let's go on this quick break. When we come back, we'll continue the conversation on the business lens. Stay with us.
Correro, your front row seat to the most pressing issues from the corridors of power to the heart of our communities. We bring you unfiltered insight, fearless journalism, and the conversations that matter. And I invite you to this big conversation table as we analyze the top stories, ask the tough questions, and hold power to account. News that informs, analysis that empowers, debate that drives change. Correro, the big conversation, every weekday at 7 p.m. only on Rapid TV.
My name is Faith Dafa Joseph.
My name is Martha Alu.
My name is Victor Arke.
My name is Divine Alex.
My name is Esther Ben.
My name is Arthur James Bruce.
My name is Godwin Sunday.
I am Ijoma Victor.
My name is Cynthia Agbo.
Josephine Bichu.
I bet you already know that this is
Rapid Television.
From the soil beneath our feet to the tables across the world, agriculture is the heartbeat of Nigeria's future. Yet challenges persist: limited finance, outdated methods, policy gaps, and untapped opportunities. The Green Line is here to change that. A groundbreaking weekly television feature that connects policy with practice, farmers with markets, and innovation with impact. We dig deep into the full agricultural value chain, from land preparation to mechanization, financing, food preservation, exports, and beyond. The Green Line isn't just a show, it's a national development platform. Join me every Friday at 11 a.m. only on Rapid TV, Star Times Channel 176, and online at www.rbnradiotv.com.
You are welcome back. This is still the Business Lens on Rapid Television, Abuja. And, you know, we were discussing about ECOWAS having to step in to talk about the flight costs. And then recently, the Senate summoned the Minister of Aviation, Festus Keyamo, alongside key industry stakeholders for an urgent meeting over the same issue here in Nigeria, which is now bringing me to the far because it is crazy. We talked about it some time ago when I said that flight has now gone up between 100 to 500 to 600K. And now I'm hearing that it has gone beyond that, getting up to 800K. So, Mr. Abiola, what do you think is even the cause of all of these things?
Well, I just think straight up it's greed because, I'll just say it is greed because you see that things that work this way in other parts of the world tend to work this way in Nigeria. During festive season, those are the times that things are meant to be cheaper. Why? Because of volume. You know that the more you sell, the more you can make marginally on all of them. But in Nigeria, when it comes to yellow tide season, instead of transportation to go down, fuel has not increased, nothing has increased, it starts going up. Now, I also analyzed the last time that, okay, you have a plane. Planes usually have different categories of seats. They are from the top category to the least category. Now, before now, maybe the top category in economy could be 190,000 naira. Then the cheapest could be 98,000, 100,000, whatever. Now, as you buy the seats in those planes, ahead of that flight, okay, the price keeps jumping up as the categories are exhausted. So, where is 500,000 naira coming from if it was never among the category class? So Keyamo was invited and was saying that if they reduce, it will affect the airlines. So when the airlines had a bracket,
he even said that this is to cover for the times that they were off season where they were not making money.
Okay, so we are legalizing we are legalizing anyhowness, because if they can do that, that means every other person can also do that in their business. That means the fish and the meat seller in the market can say, I've not been selling so much from January till now. Now everybody must pay for whatever losses I've had. If the business is not working for you, then you quit the business.
But there was a time when you check flight tickets is around 50,000 to 100,000 naira. 50,000. Does it mean yes? Because you still check. No, that's like some years ago. Yes, around that period, right? 100, 150.
Yes,
even before the festive period, there's 150. You could get from 110 to 150, 160, 116 sometimes. Now I'm asking, and then you go to book your flight. You see that they are saying last 2 seats available, which means it's also fully booked. Does it mean that at that time that they are also not making gain, or is this something? Is there something else
so this is the thing.
that is in play?
So this is the thing. Understand the way Nigerian demand works. So Nigeria excess demand is not treated as a business. It's not treated as a business opportunity for expansion. It's seen as an exploitation.
Yes, let's exploit.
If leave flight, go to normal parks, road transport. Festive season. No, nothing. The same road, same fuel, same maintenance cost, same everything. It just to Kaduna probably 2,000-3,000 becomes 8,000, right? Just because there is a lot of people that, and the question, and what they'll tell you is if you don't want to go, another person.
My customer.
That is the way demand in Nigeria works. That is where businesses exploit in Nigeria. So same thing happening with airlines, and this is not an airline conversation. It's the airline and all their partners, that's the retail partners, those guys help them resell tickets. So what happens is that these guys know that by this time of the year, airline there will be demand normally because it is festive, people travel a lot, and they buy these tickets way before, right? And they are the ones that now put the prices. This is it's just like an auction mode kind of, because a lot of people are coming in. Traffic is on the website. They're saying, okay, they're seeing it move. I saw a ticket last week move from 116. We clicked 116. Only for us to be seeing 600, 112.
I told you. And this happens in the space of few hours. I told you because I checked it also.
So it means that it is a function of, there's an algorithm the person has put on the website that says if you see traffic, keep increasing. So it is not an economics of scale conversation. It is simply lack of regulatory and oversight. That's
what I wanted to say. Exactly. I wanted to say that I disagree with the fact that the prices are being sold on the secondary market, and because it's reflecting on the official side. But your last statement made it clear that it is a regulatory problem, because if you are not meant to have a seat of more than 200,000, then it shouldn't be seen on the official website. What you should see is sold out. Then we could now be hearing discussion of the secondary market. Oh, somebody gets ticket. It's a different conversation. That one, nobody can control black market.
Yes.
But why would an official website that is not meant to have more than 200,000 naira for a 1-hour flight be seen? We will be seeing 600,000. It's wrong.
And do you think that this is the highest it has gone up, like in years, if we're going to compare in years? Because
this issue happens every year.
That happens every year, but if we're looking at naira value, this is the highest.
But in terms of the increments on every festive opportunities they get, this is how it works. This is how Nigeria is generally, whether it is investment sector, whether it is
let me tell you, there was a time in works and housing estates, Guarimpa, that a while back there was no water, and there was only one Merua. This Merua increased his cake from 20 to 50 naira because there was demand. As water increased, no, nothing has increased. But he saw that a lot of people needed water, and he just took advantage of it. Instead of him to maybe call 5 other Merua and give them the contract, he said no, he increased his own to 50 naira.
So I think two things will eventually happen in Nigeria. And I think number one has to do with the bigger the industry expands. Certain businesses will just say, I'm not going to increase my own price in this period, right? I'm going to keep it like this. Right? Even though that happens when Nigeria is structured, there's no regulation, people still go and buy up that ticket and go and resell. So that is the problem. So that is why it is a regulatory oversight.
One.
Okay.
Then also, I also feel that, I also feel that options are also a problem. If you have a good train network, I personally would rather take train. To the east, to the south, to wherever, to the north, than for me to say I want to go and ride on air. Then secondly, apart from insecurity on the roads, even the roads are bad. Let's assume no insecurity. The roads are so bad that from here to Lagos, if you make it in a day, it's
without your car.
Without your car, then
emphasis on without your car. Okay, and that is how we are going to wrap up today's Business Lens. Please keep the time with us again on Monday, 11 a.m. Thank you so much, economist. Key to markets. I remembered now.
Thank you.
Abiola Dekule and global financial analyst Daniel Elfa. Thank you so much for being a part of the show. My name is Divine Alex. Stick with Rapid TV.